The MetaDAO ownership ICO for Ranger Finance is on now. And in the past, more than $100 million has been committed to some of these ICOs. So how much will be committed? What is Ranger Finance? Should you enter? Let's get amongst it. So right now we've got a couple more days left and it's sitting at 44% of their $6 million commitment. Nothing I say is financial advice, it's educational nature. I'm not a shilly person. The data that I'm going to give you right now, it's my own opinion. And I'm not trying to preface it in a way that makes you enter or not enter. I'm going to give you all the data. And I'll tell you what I'm doing in the end, and you can do what you like. So there's a decent number of contributors. We've still got plenty of time, 3 days. And what typically happens is people enter in the last little bit of time because of a few reasons, Polymarket being one. And, well, it's just the way it's kind of, I guess, incentivized for you to do it. Something like that. That's how it kind of works. So Ranger in the ICO, we'll go over all these details here. But first, I just want to quickly show you what is Ranger Finance. I've been building for quite some time. I haven't shown it before on the channel, but I've only shown it a couple of times. It's got better and better and better. But in the early days, it was a little bit too buggy for me. This is where, like I said, super transparent. Now you can see that I'm not really perp trading. These are some positions that have been around for a little while. But the really cool thing is it aggregates. So what is it? It's an aggregator of perp stexes. We all know that Jupiter is an aggregator of the spot market. You can go and buy whatever you want on Solana and you'll get the best price, right? So this is the same system. If you're going with a bit of size, you want more liquidity, then you can route it through something that's going to have the best for you. And at present, you've got Drift, Flash, Hyperliquid, a couple of other markets here. If we come up here, Jupiter, and they will be integrated more as well, like Pacifica, Bulk, as an example. And I think it could be anything from another blockchain as well, if there's a serious desire for it. So I've got Hyperliquid right now for kind of obvious reasons, Hyperliquid being the best in the space. And yeah, that's what it does. Now, you've got some other things as well. Spot, some liquidation data. I'm not going to go about this too much because as helpful as it is, you can use CoinGlass and it's going to be more helpful than this. But this is good to see some stuff. But they also have a product called Earn. And this is where I think a lot more people put some attention, where you go and put in your USD or you put in an asset and it earns in a vault. And there's already people that do this. However, they're all kind of scattered and it's like a standalone product. So there's like something over here or something over here or something over here. However, these things, they're connected to trading, like a trading vault. So you can go and put it in, earn some yield, and then you can also go and trade. And this grows the ecosystem in a large sense because Flash Rate, I think, is very good. I think everything's pretty damn good, with the exception being like it's hard to compete with Hyperliquid due to the block times of Solana, which I know are getting better, of course. But the great thing is you can go to Flash via this. So Flash gets more success because of Ranger. There is a fee involved and it's a small fee. So it's not free, but of course you need to monetize something for the convenience. And the convenience fee for a lot of people is completely worth it. And I think probably for the vast majority, that's why you swap inside your Solflare wallet. And that's why you use Jupiter. Jupiter also has a fee on their Ultra mode. So these vaults here, you can go and put this in and you can earn a yield. This yield will go up at certain times in the cycle and it'll drop down in other times. And you can see like who's the manager of this as an example. So that's one thing. And then the biggest thing, of course, is perps. Right now, I'll be honest, like I got to be transparent. I don't love the UI. I don't dislike it necessarily. I just find it's the UI and UX needs to get cleaner. It doesn't stop me from going into something because Jupe also had a UI that wasn't beautiful. There's things that I built that didn't have a very good UI as well. It's all about just gradually making improvements until it's really, really good. So as it stands right now, if it looked as though the markets were not just going to come up and then just retrace and just destroy me, I would be trading on Ranger because I'd want to know where should I put my funds right now that's going to get me the best route, essentially. The other great thing about this is if this becomes a massive hub like I think it will, then if someone else comes in like Pacifica, you are going to probably get like a enhanced point system from them or bulk trade. And they may end up going with an ownership token as well, but they might use some sort of point system in some point. They may not go with an ownership token, but I think that is the narrative. So you could come through here and reap all these rewards as well. We've seen this with other things like Lulo as an example. Now let's have a quick look at the tokenomics, because this is done a little bit differently to Solomon and Umbra and all the other launches. The other launches were done in a way where the VC funding, if they had any previously, they didn't get any of the tokens. However, I don't think they were like self-funded. With this one, Ranger has actually done a raise. And so probably a small con initially is the fact if we come on down, the investor allocation gets 17%. And I'm just going to be transparent. This is not like perfect, because it was a necessary part, and it's not a con, it's not a pro, it's not a con, it's kind of like a small con, but it's more of a reality. I'm just going to give you the information so you can do with what you want. Has a 0% unlock at TGE, and then it just keeps on unlocking. So no cliff in 24 months, linear vesting after token generation event. So no cliff in 24 months means this 17% in 2 years, they've got all of their tokens. So they can sell into support with 17% of the supply. They could hold it as well, but you just have to keep that in mind. That is something kind of overhead. The good thing is, if they keep on selling, in 2 years, you're pretty safe. You've got your holders. And at the same time, there are actually some pretty good people that want the space to succeed. In other words, they would do probably a lot better by not selling, and they may not sell. They also went in at a typically higher valuation. We'll just cover that now. Check out Masari. This is a great tool to have. Get a subscription if you don't already have one. 1.9 million raise. They actually did 2 rounds, a 10 mil and a 30 mil valuation. That's why if you do the math on this, it's like 6% of 30 million, but they're getting 17% of the tokens because they raised earlier as well. And they did an acquisition of Volta. That's how they did that's how they do the vaults. And the funding, we can see some of their investors here. So Big Brain, like he's done a lot for the Solana ecosystem, a massive amount. And you've got Joe McCann, and there's a few others in here, Gumshoe, Monkey Ventures. Some of them, they're welcome to sell. Of course they are, but that's just letting you know this is why it's a little bit different. We've got that investor aspect. And then we've got liquidity. Liquidity's done standardly. And the way it's essentially done is, this is the model that I guess currently works, but you have some Ranger in a Meteor pool. I don't know at what level it kicks in to, but a bot has to go through all of this before you reach, price discovery. And you might think, well, I just want to put in some money and I want a 2x or a 4x. And it's like, fantastic. Give me the email to sign up to that course, because we would all love that. The thing in the world is, if there's like free lunches being given out, it doesn't stay free for very long. And if someone's making money in some area, then someone else will move into this. And we've seen this across the board. And you'll always have your leaders, Pump Fund leads, Bonk.Fund came along, Jupe Studio came along. Others have tried, but you can have a look at all these Pump.Fund charts. They just get bid up with crime, and then they just get dumped. I played with one yesterday, which I shouldn't have, and at one stage it was 44 million and just dumped down to 6 million. So, we need to be a little bit more serious in this space. And sometimes it will be the right time to go and just put money into vaporware, of course. But you're best off, not financial advice, but you're best off going and putting some money into something that has a chance and a decent chance to succeed and find product market fit, or has product market fit and find expansion. And that's what we're really kind of concerned about here. So that it does better. It produces more treasury revenue, protocol revenue, and it grows and grows and grows. And you would expect the IP to grow, the team to be stronger by more hiring and potentially, and for more money to be in the reserves and let the company go. We're not after something that's just going to give us immediate buybacks, buys and burns, and whatever else is happening out there, because just find a chart, check out the chart, it doesn't work. The other thing is, you want as much of the token out as possible, because then you've got your distribution. You don't have to worry about these massive unlocks coming on later on. So that's how this is done. This is done with the MetaDAO Futagi AMM, and this means that MetaDAO produces fees. The Meteor pool, they still get the fees. Of course, Meteor also takes a small percentage of the fees. And this is just on the single side, just range a token up to a certain level, which I don't know that level, but whatever it is. The investor allocation, we've gone over the terms, extremely transparent, right? You don't get this transparency anywhere else. And then you've got your team performance pool. You're not the exit liquidity for the sole purpose being that this model didn't work. And people that got lucky with it in 2017 and 2021, congratulations. You got lucky with it. 2021 was just governments giving people COVID stimulus checks. And then they went and bid up low float, high FTV charts, and founders made money. That meta's gone. Damn, I wish we profited off it previously, but ultimately, this is what it is now, okay? So what we want to see is we want to see teams be rewarded for being spectacular, but community or users, the people using and having ownership in this, also being rewarded. So after 18 months, that's when you're going to see an unlock. Minimum 18 months cliff before any team tokens can unlock. And it has what's called a 3-month trap, just to keep it simple. If the price launches at $1 and then with that $1, it becomes $2, well, that's a 2x, which means in 18 months, they get 20% of the tokens because there's 5 tranches. They get 20% of this amount and they get those tokens that they can then distribute, sell, OTC, hold on to, do whatever it is that they want to do with them. Maybe by that stage, who knows, maybe it's available in Camino, they can put in Camino and borrow against it. It doesn't matter. The thing is, with these tokens, they have to hold that $2 amount for a minimum of 4 months as an average price. So if it goes up to $4 and it goes down to $1.80, as long as that TWAP equals $2 or more, they're fine. And then you can unlock at 4x. So it's be $4 and then $8 and then $16 and then $32 before you get the full unlock of the token. And if 32x happens, then fantastic. You put in $1,000 and you've turned into a 32,000. This is not a simple feat to do. Like, it's going to be hard. Probably a lot of teams will take a few years to achieve that, and a lot of teams will not be able to achieve that. But it's meant to be hard because you are aligned. In some ways, you don't have 1,000x, you don't have 100x. Those days are largely gone. But you also don't risk losing 90% of your bag or jumping on a meme coin at $35 million market cap and writing it down to 6 million. Then there's a small unlock for some ambassadors and ecosystem partners. Very, very small. It's 3%. But initially, you can see all the details down here, meaning on token generation event, the math is 0.75% of total supply is actually been unlocked. And then with people that had points, because they had a points program for, you'd speculate on it being an airdrop. With the points, there is no airdrop because there's nothing to airdrop. Maybe there's a proposal that passes in the future which gives you an airdrop. But that proposal would have to be passed by the holders of the tokens. And they could get some sort of alignment, but who knows? The thing is with this, with your Ranger points, you get a guaranteed allocation. If you believe in this, if you've been using this, you probably want some sort of ownership of the protocol. And that's how it works. And then we come on down and they've got this new mechanism, which is called a buy wall. So if we come back to this, you can see the amount they want to raise is 6 million. There's plenty of people putting out their ideas of how much it's going to raise, and they could be accurate. And we'll quickly go have a look at those. But basically, if they raise 6 million, they may decide to also take on another 2 million, which would just be used for a buyback of the token if the price actually dropped below. It'll be part of the treasury and it sits down there in the treasury as automated buybacks for 90 days. And that's how that works. A fixed 90-day period. And this is very important because with the ICOs, quite often there is a minimum price, which you shouldn't really fall under. The fundraising price, right? In general. And if you do fall under that, well, it's typically been a good time to buy, let the price come up to what we call NAV, and then sell the token at the very least. But also, it's a bad look for something to even go under NAV. So you want that buy pressure, and that's what this does. And this is a pretty good idea. It's a very good idea, actually. Let's have a quick look at a little bit of speculation now. So there are insider monitors that have started to kind of come out in terms of people putting in bids and working out like where would the price go on Polymarket. And you can also do this on Dupe as well. And as an example, this was today, but you could have gotten a better price not too long ago, I guess. People are expecting you're going to raise more than $20 million. The previous MetaDAO ICOs, they did actually raise a lot more because whales knew they're going to get their money back. So you could actually, if you had a huge amount of money, you could jump on Polymarket before it was the thing to do. And you could go and put in some bids buying these at a very low price, something like 100 million, you'd buy for like 1 cent. And then you can put in the capital, you get your capital back, and you go and make $500,000 on the markets and Polymarket if you had the capital that you knew what to do with. So if we go and have a look at Polymarket, and you can look at this in Dupe as well, you can see the market is clearly pricing in this. It's even pricing in a bet potentially 40 and 60. And then at this stage, people are betting against it. I will not be betting it against these things because money can move the markets, and the ownership meta is more than just a meta. It's a proper narrative, and there's a huge amount of alignment. Plus, it comes from a connected team and team that's very interested in shipping, not just shipping. Like, I think they're very interested in being known for like being successful. Like, there's a pride factor, which of course I think everybody has. But this is what we can see right now, working out how much money is going to go in. But I'm not jumping onto this. But if you think you've got some inside information, you can certainly do this. But just keep in mind, if you see a massive FUD piece, it's generally because someone's trying to profit on these markets. Or if you see something extremely glowing as a report, it's because they're also trying to profit, especially if they have a massive audience. Now let's go over the team. So Cobra is Barrett and co-founder of Ranger, also co-founder of Mountain DAO, and is well known in the space, probably more because of Mountain DAO. And we're doing a podcast with him, which I'll release tomorrow. So watch that for more information. The important thing is you need to know the founders. You need to know like how relentless the founders will be at getting distribution, at finding the people that are going to use this and take this to the next height. And I think these are some of the right people for sure. You've also got FA2, and if you want to find out more information on him, you can go and watch his talk at the Solana conference. And you've got Nasri, which I did a video with on my channel a little while ago, maybe a year and a half ago, and he is in charge of growth. There'll be other people in the team, of course, devs and whatnot, but these are the people that I'm familiar with. So let's try and condense this all so you've just got like one takeaway. We can clip this as well. Jussie's done a very good kind of TLDR. So it ends on the 10th of Jan. Your best time to probably get in is in the final few hours. Keep in mind that if they go to $20 million and they want to raise $6 million with a $2 million buyback, the people with points, they get the first initial amount of guaranteed allocation. And then a lot of the amount over that $6 million will be refunded because they're only going to use a certain amount that would go into that buyback section. Let's call it 2 million to bring it up to 8 million. And so then 12 million would be refunded, and it'll be refunded pro rata. So you could put in $1,000 and then get $900 back and $100 worth of Ranger. That's just something to keep in mind. Of course, you can buy the token on the open market. You can deal a meme. You can do whatever it is you want. Importantly, you can use the protocol and have ownership of the protocol in a sense, and then keep using it, tell your friends, and then more users, more treasury, more, you get the point. So on MetaDAO, we've covered the raise. The buy wall is fantastic for downside protection because we do not want to see the downside, an ICO being under its initial raise, which happens all the time, right? Like it happens all the time. And then we've got all the tokenomics just locked out here, just so you can just see it in one screenshot. With the big thing, keeping in mind, team, essentially 30%, it's performance-based. If they do not execute, they get nothing. All they're getting is a wage to build this, which is nice, right? Like it's nice to be paid to do what you want to do. But at the same time, like in crypto, you want a lot more upside than a wage. And to be clear, the monthly spend for like infrastructure, running the company, salaries, everything they need to actually spend is $250,000. So in an ideal world, it doesn't take very long before they are generating much more than that, which goes to the treasury. It always goes to the treasury, actually, because your protocol revenue goes to the treasury. You cannot use it as a team unless you pass a proposal. You just have your monthly spend, which is $250,000. So that's a TLDR, and it's a good one from Jussie. So how do you want to play this? This next part is going to be opinion piece and opinion only. Of course, this is my opinion. This is from the knowledge that I have acquired from speaking to people, using it, and reading other people's thoughts. So I'm not going to jump onto Polymarket. It's a little bit too risky. You could put in some bets now if you wanted, but at the same time, it doesn't have as much upside in terms of raising just straight capital as Solomon or Umbra. Okay, so just keep that in mind. More people know there's no free lunch. This does have product market fit. That's the next part. It also helps improve Solana in general. So I would expect Anatoly to be retweeting this, Raj to be talking about it, Big Brain. Like a lot of people would be talking about this. Some of them would have ownership stake in it, like Gumshoe and Big Brain and Joe McCann. But in general, like it's good for the ecosystem for more people to be aware of this. I think with more money coming in, more money available for salaries, they can start to put attention on the things that will make it really, really successful as well, such as working on the UI, working on the UX to make it cleaner and cleaner, maybe an aspect of education along with, being able to check everything that you like. At the same time, there are some cons. If you go and you put all of your longs and your shorts on, then they're like isolated markets as far as my understanding is. So you could be liquidated on drift, but you have plenty of collateral, but your collateral is sitting over there on hyperliquid and that market's doing well. However, at the same time, you're actually putting risk out into different areas, and isolated trading is much better. Plus, the vault aspect will probably end up doing very, very, very well. And then the final thing is, I am red-pilled on MetaDAO. My team and I, we've built metadao.link, and this basically gives you an aggregate of all the information, what's going on, so you can go and find what it is you want to see. In terms of ownership tokens, it's more than just a meta, it's a narrative which needs to stick to make crypto like fun and worthwhile. MetaDAO is like hundreds of times better than the nearest competitor, in my opinion. You can argue all you want. So launching with MetaDAO, it's going to carry a lot more weight. It's also probably going to get noticed by some bigger exchanges that will want to list it, which may add some sort of speculation. So my actionable, not financial advice is, I'll be entering into this, hoping to get some tokens. I'll also be trying to buy some after it ICOs, but just not at like a top. If it starts at top, if it comes on down to like its price, I'll be doing that. I'll also be LPing it, and then I will be using Ranger Finance as a perps trading venue because I have ownership of that. The more this does better, the more my Ranger tokens actually do better. So that are my thoughts. Let me know yours. And remember, tomorrow a podcast will be released with Barrett, where I ask him plenty of questions. Watch that as well so you can get to know what one of the co-founders really, really thinks. And if you're not going to jump into the ICO, you may at least want to check out Ranger Finance to see if this is where you want to trade.